All right, let's stay on the markets now and bring in Winnie Sun Group Wealth Partners. Winnie, always good to see you here. Top of mind, I think, for all of us is this record run in the NASDAQ. What do you tell clients that are seeing Amazon, Tesla, you name it, these stocks continue to touch record highs each day? Do you just back up the truck and swing for home runs?
Well, Brian, I wish we would tell our clients that, but unfortunately, our sort of motto is to be conservative right now and to be, optimistic, but very, 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 very cautious still. So we still have clients continue to add to their positions. Obviously, a lot of Americans are continuing to add in their 401k. But in terms of their portfolios, we're still saying right now, let's hold a little bit more cash than normal, and we're going to be buying on opportunities here.
How difficult, Winnie, though, is it to sit out of a rally like this in cash? At some point, don't you have to put that cash to work?
You do have to put the cash to work. But the good news is, Brian, it's not like it's all in cash. There's only, we're holding a higher percentage of cash, but certainly, especially here on the West Coast, a lot of our clients have a good concentration already in tech. A lot of the names that you're seeing in the NASDAQ that are moving up, fortunately, they're seeing a lot of that move up in their portfolios presently. So it's not like they're completely losing on opportunity. But right now, especially given that we're still knee deep in phase 1 of the coronavirus and we're expecting another phase, especially here in California, we're seeing increased numbers, increased hospitalization. I think definitely our clients are very, very much aware that things could turn sour pretty quickly, and we certainly don't want their portfolios to drop that dramatically again.
Winnie, are you seeing appetite on the part of investors for these pandemic-related companies like the airlines, like cruise lines, like hotels? Is there an appetite to get in there and do some bargain hunting for companies that might actually come out of this better than others?
Well, certainly, and that's a good question. Certainly, with all the depressions in the travel industry, it looks attractive, right? The prices are dramatically lower than they were, just a few months ago. However, that being said, I think our clients are thinking, well, if I'm not comfortable when getting on a plane right now, and we've seen that with American Airlines and United Airlines, they're saying that their flights are almost full. They're not taking away that middle seat. If they're not really comfortable getting themselves and their family members on those planes, I think they're going to be very hesitant to go back to those travel hospitality stocks right now. Instead, they're looking at certainly stocks that are doing well because of the pandemic. Certainly, you're seeing anything that delivers, anything that's making our life a little bit easier here at home. Those are the areas that our clients are very much honed in on. And fortunately, they own a lot of those names already.
Winnie, a lot of your clients, you work with a lot of wealthy clients. Are they inclined? Do they want to hold stocks through the election? It's almost crunch time.
It is almost crunch time. We are looking really closely at that election. And certainly, I think at least many of our clients are still younger, right? They're still in their 30s or 40s, 50s, plenty of years between now and retirement. So certainly we don't want them to be out of the market. Being the stock market makes a lot of sense for us. In fact, holding cash doesn't mean that we are just going to keep cash through the election and beyond. It's looking at opportunities, areas that we feel confident in long term, that we can start to position ourselves. And who knows, if we have increased volatility before the election, that could be a great win for our clients. And so we're looking at it very, very closely. And let's see. I think overall, right now, our clients are more focused on who the candidate will be in November.
What about outside of U.S. equities, though, right now? Are we've had some guests come on and talk up some of the emerging markets as opportunities, perhaps, if you're very choosy. What are you seeing outside, if anything, outside of U.S. equities?
Absolutely. I think it would be, we can't just look at the United States. There's a lot of activities going on outside the United States, especially here in Asia. We're seeing the information come out through Hong Kong and the developments there in China. And, I think we certainly are seeing an uptick on some of the Asian markets. And let's talk about Europe too, right? So there's areas that we feel that our clients can continue to build on, but we're being very, very cautious because obviously it's not just the market. It's not just the stocks and positions that we're excited about, but it's all that geopolitical risk too. And that can't be discounted. We're seeing that already. Like right now, there's so much talk about Asia and becoming an issue with some of the social media applications and companies that we love here in the United States. What's that going to look like? And most important, how is that going to impact investors' concerns, fears, and more anxiety? So we're sort of taking a back seat right now, but watching very, very carefully.
Winnie, you mentioned your clients are focused on who could ultimately win the presidency. What are they prepared to do if Joe Biden is elected president? What are they going to do with their portfolio?
Yeah, that's a good question. So many of my clients are high net worth clients. And so certainly we are looking at more tax sheltered investing if we get closer to a Joe Biden presidency. I think our clients are aware of that. They are fully they're pretty excited. They're hoping that takes into effect, certainly here on the West Coast. But I think they're being very, very open-minded. I think, a lot of times people will say, well, since your clients are high net worth, does that mean that, they're afraid of a Joe Biden presidency? And I think that's not the case. I think they're looking at this presidency as being something that's going to be helpful, not only for them now, but their children and their grandchildren. So if temporarily they take a hit on the portfolio, they're willing to take that. They're willing to take that sacrifice for sure on the short term.
But are they prepared to sell stocks that have notched gains in their portfolio because they will possibly have to pay higher taxes? Will they sell come November?
I don't think they'll sell. Most of our clients are invested for the long term. They're fully diversified. We are holding heavier levels of cash. Perhaps there'll be opportunities to do that. Much of their investments are tied into tax sheltered investments like pensions and IRAs and 401ks. So, I think that the high net worth is here in California has traditionally already experienced very high levels of tax. I don't think that's a new thing for us. In many ways, we've always tried to maximize our tax shelter investing. That's not going to change. It's just going to be more mindful, more discussions, and really more of a long-term approach to what we're going to do. But again, sometimes, there are certain things that are more important than how much you pay in taxes. And I think our clients are at that point right now.
Just to bounce off the tax shelter idea, I always think of muni bonds when I hear that, right? Triple tax free. What are you seeing in the muni market right now, if anything? And are clients more inclined to go into that, or no, because risks are high there with perhaps municipalities, given this pandemic, not as strong as they'd like to see?
Exactly. And I think that's a great point. I think we are looking for areas that give us a potential for higher growth and, of course, less risk. Muni bonds, although we certainly had positions in muni bonds in the past, I think in our case, many of our clients are still on the younger side. So they're still very, very comfortable with growth. Obviously, being here on the West Coast, left and right, we've got tech companies, biotech companies surrounding us. So these are names and companies that we're familiar with. A lot of the clients work at these companies, entertainment business, entertainment clients as well. Their children, their friends, their family work at these companies. They're very comfortable with this business model. So I think they actually do prefer, and they're not betting against America. They still think long term when it comes to retirement, it comes to your children's education. They still feel comfortable with names like growth names.
All right, let's leave it there. Winnie Sun of Sun Group Wealth Partners. Always good to see you.
Thank you so much for having me.